The big question that we have today, folks, is will the small caps continue their downward spiral until they crash, and or is there a glimmer of hope on the horizon? Let's jump over into a picture of the Russell as represented by IWM. So IWM, notice on Wednesday what happened. IWM gapped down, there's a big gap here, below the 50-day moving average, and then went back up, tried to rally above it yesterday, failed, and now we're getting a big sell-off today due to the financial. JP Morgan had a crappy report and that kind of stuff. Take a look at where it may go. I'm looking at a zigzag type pattern, zigzag, and then possibly hitting all the way down to the 189.55 level. We'll see if that happens. Also, that is the 200-day moving average. And notice all of the momentum, including the weekly momentum, which is always a stronger indication, is all pointed down and breaking down. I always like to go back in time and look to your left. See what happened the last time the TSI on the weekly chart crossed over. We went on a significant dump to the downside with IWM. And what I like to do on evaluating that is how far might we fall here? Well, we can always look towards symmetry. And so if we get a symmetric move, because oftentimes stocks and indexes, they run on symmetry, we'll get in. So that would give us, if it did the same type of symmetric move, gives us a downside target of about 174 on the IWM. The 78.6 is also another area where it could slow down and stop at about 182. The big thing driving what's going on with the Russell, of course, is interest rates and inflations. Small caps tend to not do as well in a highly inflationary environment and where the interest rates are high also compared to what they could be if they were lowering the rates, because the cost of their borrowing money to stay in business is greater than or is higher than some of the larger companies out there that are working. So, Neil, that's what I've got on IWM. It's looking like we could get a pullback all the way back into the magic fib box or lower. Another place I'll keep my eyeball on is right there at the 50% retracement, which is about 193. So what's your thoughts on IWM?
IWM, I got a sell signal on my daily triple screen a couple of days ago,
Mm-hmm.
but the weekly is still holding,
Okay.
including the MACD and RSI. So one of that had to break before I'd say, okay, it's going down. I still have some hope, I think.
You still have some hope. Okay. And I'm watching also these weekly momentums. And I'm not saying that I won't get back into IWM, but our premium members are really pleased because we actually got into a trade on TZA midweek when it did hit the breakout. And TZA, we hit our profit target number 1 today of 10%. Profit target number 2 is up here at 2150. We bought this right about coming up off of the 34-day moving average as it pulled back in here towards, we bought it out on this bounce right there, actually, at about 1793. So it worked really well for us. The other question that comes up today is what the heck is going to happen with the crypto mining companies now that Bitcoin is going to have its reward for mining Bitcoins? I tend to trade the entities that are dealing with Bitcoin, but not necessarily Bitcoin itself. So just keep that as a burning question because we're going to dive in and do some digging. We're going to do our own mining on the Bitcoins. And so let's go jump back and let's take a look at the spiders. We took a look at the Russell. Similar type situation, although the Spider or S&Ps are in a much better position than the Russell. Why? The reason is because one, we're still above the 50-day moving average right there. At the same time, though, we have crossed below the 8. Now, that would be a normal sell signal for me. If I get a close below the 8 over here on the weekly chart, and my momentum has shifted to the downside, I want to be looking at doing a similar type measurement. And I've already put that in place where I'm measuring this pullback here and I'm comparing it for symmetry to how far could it pull back here. I really like what this looks like, Anil, because if we do get a 100% symmetric pullback, look where it puts us, right in line with where it broke out before. So we know there's a pocket of buyers probably there. If you follow like Wyckoff, you know that there's buyers or there's a demand for the entity right there. So I would look to say, hey, if I get down in here, that's awesome because look to your left, and that's where we broke out of before. For the time being, though, am I a buyer? No, I am not. I am not a buyer of the spies. And I tend to not really buy the spiders. What I look to buy is I look to buy either the NASDAQ TQQ or the Russell IWM and or TNA or TZA, one of those leveraged ETFs. And so that's what's going on with the spider. Let's take a look at what is going on with the NASDAQ as represented by the Qs, Q, Q, Q. So similar type situation, exceptional that we're staying above the 50. However, we are getting the jackhammer effect where price actions, every time it comes down and hits and then bounces and hits and bounces, is starting to bend the 50-day moving average over. And eventually we get a close below the 50, then stand by because we're probably going to drop. Recognize though, we do have this longer term uptrend here where that is a potentially really great target. I would, and again, draw a similar type line comparing here, taken up to this high. And it gives, what it does is it gives you an idea of where price actions could be pulling back to. So, what's your thoughts on what is your triple screen telling you on the NASDAQ and the spiders?
On the QQQ, actually, on the daily, I have a sell signal
Okay.
on QQQ. Weekly is still intact, but MACD has broken down, so that's a cause of concern.
Okay.
And on SPY, it's basically same story.
So when you say there's some concern when the weekly indicators roll over like the MACD and all that kind of stuff, what do you mean by there's a concern?
Uh, Concern, that means watch out. It's going down because I see a sell signal on the daily,
Okay.
and then on the weekly, it's on the SPY. It's barely holding the MACD. RSI is intact, but on
Okay.
QQQ, the MACD has gone negative. So that is a concern that it might go down further.
Okay. So I'm interpreting what you're saying is that if you primarily trade in a bullish direction when the MACD and your triple screen is telling you what it's telling you, it's a time just to be leery and not necessarily jump on any long
That's right.
position.
Yeah, I will not get into a new trade here.
Okay. Cool. So we're sitting here as of about 12 o'clock today. This is last year's equity curve. And I don't put it up here to brag or anything like that, but I put it up here as representative of this is what tends to happen. No P&L goes up in a straight line. Yes, the white line is my goal for every year. But, the February to March last year, I showed a loss. I was flat for April. And so this type of thing, you have to get used to this. July, we had a loss. And so depending on where you take your snapshot or where you want to compare with, a lot of people go, oh, well, for the year you were up here. But there were times when it looked really crappy, but I knew my system. I knew the characteristics of my system. I knew that it basically hits 65% win loss ratio and repeats at 37% per year, but for the last 12 years. I know that if I kept following my process, uh, and follow my system, that the numbers would work out because the probabilities were on my side. I just wanted to share that with everybody because then this is where we're at right now. April's not complete. And here's where we're sitting with the sell off. Russell has gone back down into negative for the year. We're sitting at 9.88 for the year, but it has not been in a straight line. It's been zigzagging up and down. Of course, we're going to dive into the state of Bitcoin and the upcoming halving, what that means to the crypto miners. Will that provide some opportunities for us? But before we do that, before we dig into that, let's go ahead and dig into a couple of stocks that Neil has been hunting down and researching. And so, what is the first stock you want us to take a look at, Neil?
I talked about it, NVIDIA last week, and there was a lot of chatter online about NVIDIA and what it's going to do, whether it has peaked or is it still going to go up. And there are mixed opinions in the market. My personal analysis, based on the factors that I follow more and more, and that is accumulation distribution, SMR rating, and up down volume ratio.
Okay.
That's telling me that it's still holding. There's maybe it's changing hands. Maybe some funds
Okay.
are taking the profits and some new funds are getting in, and some stealth activity is going on. That is what I think.
So, are you a buyer right here?
I'll probably take a small position again. Yes.
There's NVIDIA. And that's what I was talking about is right here, up here, Anil. It's
Yep.
really, it's a good place to buy it. But the last time it did cross over, it just drove sideways, was very well controlled. And so, yeah, maybe you got to do the same thing here. We'll see. Yeah, so, what was your other one?
Other one is Salesforce CRM. And
Okay.
on CRM, I'm saying it's still in the base with good accumulation distribution and up down volume ratio. And it's about, if I look at the market Smith chart, it's about 7% from pivot. So it's maybe a good opportunity.
Okay. Are you waiting for a trigger of it breaking back up or going to buy off support?
Probably buy of support right now.
Okay. 'Cause it is sitting there right on top of the 50-day moving average right now.
Yeah.
And it's the momentum, daily momentum is getting to the place where it should be turning around. So yeah, I like that. And Salesforce is going to continue to act well. The one that I was looking at today, I'm going to look at JPM. JPM basically, I think we went crazy with that, but Jamie Dimon, who I think he's the head guy at JP Morgan, right? While they did okay earnings wise, it was his fear that he paraded to the market that I think resulted in this big gap down. However, we have to watch this big gap down because this is significant. It's significant because it is a huge volume, larger than it's been for quite a while. We're dropping below the 50-day moving average, and it looks like we're going to close below the 50-day moving average. So when that happens, that immediately shifts my thoughts to let's look for a downside opportunity trade on JPM, which would mean basically a rally, maybe back into this window here, or maybe just to the halfway point of today's big red candlestick for a continued move to the downside. Where's it likely to go? 177 or all the way down. It could get down to 165. Those are not huge moves for a stock like JP Morgan because right now, JP Morgan, it's like this drop that it's done right here. Well, that is right there. That's only 9%. I kind of like JP Morgan. The next area, like I said, down in somewhere between 173 and down at 165, it would be of interest to me. But I think I'm using it right now as kind of like the canary in the coal mine, that it may foretell the markets and the economy getting worse. Now, we don't know that for sure, but that's one of the things I'm thinking about. Then, as far as Bitcoin goes, with the halving, I'm looking at three different entities, but I'll cover two of them. Coinbase. Coinbase is not a buyer, not a miner, but it has gone on one heck of a nice run from when it broke out down here. We just take a real quick note. It went from here. Even it closed right now, it's about 96%. It got as high as 123% from where it took off at. And right now we are getting a close back potentially below the 8-day moving average, which could drive us back down, or it could bounce around a while just around the 8-period moving average. Look for a breakout level of, I would say 206 or so. The other stock is this miner, Marathon. Marathon, as you can see, is melting down. This is one heck of a double top that we're seeing right here. And at the same time, what are some of the things that, as the miner's reward is halved? It's not the first time it's happened. It happened in 2012. It happened in 2016. It happens in 2020. And when that happens, the mining operation revenue and profitability favors countries that have low utility prices. I didn't know this, Anil, but it does. It favors countries with low utility prices. And that's places like, believe it or not, Iran. Some of the other countries in the Middle East have lower utility prices than Europe. Europe's not a really great place. And then the US, our utility prices are not that great either. So the winning mining companies will be the ones who will operate the most efficiently as they upgrade their equipment to be able to mine at a much more efficient manner. So again, I'm not a buyer of Mara right here, but I think that Mara will be one of the players once the dust settles after Bitcoin cuts in half the reward that it's given the miners. So but that's the two stocks I wanted to cover, or three stocks really quick. Any thoughts on the miners or JPM?
No, not really. I think you covered it nicely.
Regarding Mara, Mark says, where do you see a new support zone? Let me zip back to that really quick. We know we've got a support zone down here based on this pattern. And so that's at 1462. So that's one. Then after that, then we start getting down into the $11 area. And then finally down into $7.53. That's where I would see those support zones. Okay, good question. What could be your beacon in these struggling times, tumultuous seas? Get on board the premium membership and you can discover and illuminate your path. But we offer a good 3-month test flight. Check it out. See if it's a fit for you. We've got a lot of traders over on the Discord channel that are absolutely knocking it dead. I love how we are all over there and have a wonderful community, coaching each other up and helping each other. So I'll put a link down in the description. Just a reminder that all materials we do present are for trading purposes. Traders should always pay per trade any new method prior to the risk of their own personal capital. Past performance is not an indication or promise of future performance.